Alright guys, welcome back to the channel, and today I'm trading gold. Like this will be like the first time I'm trading gold. So let me quickly take you down to the chart, then tell you how I did this analysis. So it's more like a top-down analysis. Let's go to the daily time frame. So for a long time, or if you start from the weekly time frame, you see that I already marked out this weekly fair value gap, and I've always been expecting price to reject from here for a very long time, which it did. So this is just like a retracement to continue to push out to take out this order high before getting to this one to continue bullish. So let's go to daily time frame, and this is what the daily time frame looks like here. Price coming back to this imbalance here, which is a good point of interest. Daily FVG. Then we go as low as 4 hours. Now on the 4 hours, you can have this to be our liquidity. Delete this. We have this lows to be liquidity here. Then we have this 4 hour FVG in line with the previous with the day FVG, that's this daily FVG. So there's a point of interest here. This is the point of interest from the daily time frame. You want to start taking price here. Now let me tell you something. So as of yesterday on the 4 hours, that was when price came back to this imbalance here. So all I needed to do was to look for confirmation, not just take the entry, look for a confirmation. Okay, you can see yesterday price just selling down to the point of interest. So now this is where our confirmation came in. If you check on the 1 hour, price retraced down into the fair value gap. Then I went as low as the 15 minute this morning. I took this trade around London session. So I went as low as the 15 minute. Go to the 15 minute. When I zoomed in, I saw the market structure shift here. Then I was also waiting for something here. I was waiting for price to come back to this market structure shift. But due to the experience I had some days ago, with not just due to experience, let me just say due to experience, not just yes 3 days ago experience I had with USD card, price do not mostly play out 100%, So I had to risk a little, which was this year, because seeing price at this my 15 minutes point of interest here, which is this AVG. Now this AVG is in premium price, but because gold like behaving that way, see this AVG is in premium level. So if you zoom in, you can see that this AVG is above the 50%. So this is the right one price was supposed to retrace to, but for some reasons price did not really come back to the FVG. So it went from here. Although I had this other one to be my second point of interest. So if this one did not work, I'll take this one. So this one came in, and you can see the reluctance here in price action. I just know that this one was not going to work out, so I had to place my stop loss here. I entered very early. I think I entered at a good spot too. If I should put in my this thing, my history. So you see where I entered trade history. Let's go back. You see where I entered just around here. Then my stop loss. Yeah. So if this one fails, I'll come back to this level. That's just it. So this is it here. I have the market structure shift. Then price. This is a momentum. A good market structure shift is momentum, and we have an imbalance. The price came back to this one, retreat, causing a break of structure. Although after this level, I was not interested in this full price again. And yeah, this is a big risk for this account. €6 out of €18. I just had to risk it, and I did not take it everywhere in my account. Yeah, but since I'm risking just this account, I just had to risk it and let it go. So this can be a possible point where price may want to come to, but price is going to take out this high today, and that's just where I'll be trading this market to. So I waited for price action right from the daily time frame point of interest. The same thing is also happening with USD card. Let me show you USD card, because I traded USD card too, and the same thing happened to me, and it's happening to me again right now. Right now, it's annoying. It's annoying to see price zoom off before you can even decide to enter, especially when the price is not coming down to your point of interest. or when the price start to go away from a bad level. So you can see, let me just take it to daily time frame. So this one was a CRT entry model here. You will see if I should zoom in, CRT entry model where price took out this low. I don't know why it's not so visible in the trading view on the daily time frame. I always start my analysis from the daily time frame. So price took out this low here. Then after price took out this low, I went down to 5 minutes. And not just price taking out the low, we are in a higher time frame FVG. We check the weekly time frame. Let me show you the weekly time frame. So this is one analysis that I've been waiting for, and yet it did not really, I did not have a chance to enter. So it was annoying. Price entered the weekly time frame FVG here. It filled up to 50% of this FVG. So I went to the daily time frame to look for a CRT entry model, which was actually a very nice one here. You can see this CRT entry model where price swept 2 days low, day one, day two, and inside the fair value gap, I went to look for a shift in market structure. And on the 4 hours also, I was looking at the price on the 4 hour level. Now on this 4 hour level here, chart itself is not looking too good because I saw this buy and sell movement, but I just needed to counter trade first before selling. I was just supposed to wait for continuous sell because we are overall on the bearish market, you can see, but I had to do a little bit of counter trading. Then because of the CRT entry, but I always like trading CRT entry model because it used to work for me all the time, almost all the time. Yes. So this is it here. I had my first point of interest to be, let me delete this arrow. On the 4 hours, this is the first AVG. Let me remove this history so you can see the AVGs very well. Trade history, that part. So this is my first AVG. Yeah. And this is the second one here. Right below it. This one is more looking like an IFVG. So on the 15 minutes when I saw the confirmation here, this trade, so this very trade is annoying me. I won't lie to you guys. So in the 15 minutes, if I should take out the second FVG, I have this to be my shift in market structure. I have this to be my shift in market structure around the CRT entry level on the 15 minutes. So I was waiting for price to retrace to the second one because this one is still at the premium level. If you check here, this market is more from the premium level. Price did not retrace down to the discount level, so I did not engage in some of my accounts. So the price is more from the premium level. The other one was right around here. So I just took it straight down to this other daily imbalance. Now let me show you something. This market too, everything is just happening incompletely and it's really annoying. It's really annoying me. I will not lie because I'm so unsure about the price action. When it does don't get up to 70% or when you don't have a complete market structure, you tend to miss out some good trades. And now I was supposed to take these cells right around from this level down to this other low because normally this is when my take profit is supposed to be because we are actually following the trend. So we are going to take out the external range liquidity. But that's not what why I'm there. After this whole buy move went up the way it did because it was incomplete for me. Now I was going to catch this sell model too in on my account based on how I was waiting for the sell and I will take the sell trade. The sell trade too happened on the 5 minutes. I have a confirmation here. This is a shift in market structure. Price breaking these lows. And I cannot trade massively like this. Imagine having a trade here and your stop loss is around here because this is the exact place to keep your stop loss. It's too much. It's too high. 300 points. So for me, trading a small account, I cannot be taking trades at a with a high risk because whenever you take this kind of a trade like this, you tend to lose the trade because now you try to minimize your risk. Let's say you minimize your risk to this high and price come and take out this high, you've lost the trade just because you're trying to enter when you're not supposed to enter. This is the normal entry here because number one, now in 4 hour time frame. This is a 4 hour time frame. Let me tell you. So this is a 4 hour time frame. This is a 4 hour time frame. Price traded into this fair value gap here. This one's a daily fair value gap. Price traded into this fair value gap here. And I went to check out on the 5 minutes. Now on the 5 minutes, I have a shift in market structure around here. I have a shift in market structure around here. Around here. So this is a 15 minutes fair value gap. It's a 15 minutes fair value gap. So my own aim was after this nice shift in market structure with this momentum, just retrace into this fair value gap. I'm just gonna take it instantly. That was what I wanted. For price tried to go in, I was now hoping that the unemployment claim is gonna push price inside the fair value gap and yes, we'll start selling. But the news came and did not really there was no serious reaction or effect on the news. I just wanted to take the trade from here let me bring up that stop loss. From here to here, about 1 is to 3. Just wanted to take 1 is to 3 because I was sure about price taking out this liquidity today. And you know, as a day trader, I always like exiting at a liquidity level. So 1 is to 3 would have been around here. Just 1 is to 3, guys. So I can leave the market. But that's what is happening, guys. So this thing happened again, time without number. Because the day I also talked about price not coming to your POI, that's you against the algorithm. And some reason why I do enter some market is that there might be an FVG around. Let's just see. Let me explain something now. If see, this one also happened the same way the buy setup took off. It happened the same way that buy setup took off. Look at now. We have this BD range from this high to this low. This is the range. And you see price did not even tap on the 50% level. This would have been a good rate to sell from at discount level. So price just tried. So it took off from discount, not giving you a premium price to sell from. You know, this whole discount price and premium price is something you really need to understand because when you're selling your goods, you want to sell it at a good price, a premium price, that's a high profitable price, something that is nice. Then when you're buying, you want to buy from a discount price, something that is going to, be cheaper for you. That's just it. And if you are somebody that has a lot of money, you might not really bother about the discount and the premium price. Let's just say a rich man going to a supermarket to get a goods. He's not going to bother about the promo they are doing or the discount they are offering at that time because he has the money to pay for it. That was what happened in that buy scenario here. So some people have the money to reach from here down to this low. So we that are trading small accounts, we cannot do that. So we just want to take a lower risk trade. So you cannot really trade all of that with a good mindset, a good psychology. So sometimes you'll be so bothered, you might even trade your stop loss or adjust your stop loss to a place that you eventually get stopped out. That's another reason why I don't bother taking trades that having complete um price action. Now looking at this one also did the same thing. It did not get me to the discount to the premium level where I could sell from because I don't really have enough money to start selling off from a discount price. It's just like selling out your goods to get a new one because maybe you've stayed long or the goods is too old in your hand, something like that. So that's just it. So I'm not in a hurry to sell off my goods. Yeah, that's why I did not really take this one on most other important accounts. So that's just it now. This has been my exit point where I held this low to be liquidity 1 is to 3, then I'm out. But price did not really play out that way. But later on, maybe on Friday or next week, price can still come to the discount area provided you are patient enough in the game. So I'm not forfeiting this level. I'm not forfeiting this level. Even if I show you some examples, again, let me show you one more example on GBP USD. I also have that one on site too because I like what I'm seeing. GBP USD and Euro USD to GBP USD. I hurried up selling this price. Now looking at this on the 30-minute time frame, this is a good break. Okay, mitigation block entry model, and yes, look at. You see what used to happen? I hurriedly sold from here because I thought price has taken out liquidity and this is a strong high. Like price took out liquidity. Let me show you now. I hurriedly sold from here because I thought price took out liquidity from here. But the thing is that price is not actually using this as a range because this is within this range now. And you can see that this is an imbalance and you have this to be liquidity. So this is a mitigation block aligning with a fair value gap. That's what ICT do call the whole, what will I call this? The whole um unicorn entry model. And you can also see something happening here. I also have this fair value gap here also. So too many point of interest. Let me see how this is going to play out. Either this one or this one, but I'll rather wait for this one. Yes, I'll rather wait for this one. Now in this case, yeah, you see that we are in premium price. Let me check it out. Let me check it out. From this low to this high because we are doing the overall range here. So if this one is in the premium price, I might sell now because we are in our point of interest, the first point of interest, and price is reacting with the time frame. This is 216, so by 2:30 we are ought to have the opening of New York session. So this is above the 50%. So I might sell from here, then place my stop loss here. Then if I get stopped out, I wait for second entry around here. So that's it, guys. Let me go take this trade. Then I'll might update you. Alright guys, welcome back to the trade. And the last place I stopped was going to take GU trade, and so this is going to be like the update on the trade. So as at yesterday, this is a day after I made that video because I've been so busy I've not been able to come back to do the analysis again. So at first, this was my initial point of interest, guys. This was my initial point of interest. You can see this is what we call the break mitigation block here. You have a fair value gap to give you the unicorn entry, then you have this liquidity. So I saw this to be a good setup, and I've been waiting for this level, this very level, for price to come back to. Then while I was waiting, I also had this fair value gap. I needed to take a trade from the New York Times, which I did. I did take a trade from here, but you can see this whole rejection, go up, come down, go up, come down. So I closed out on the trade. Then this morning, price took out this high, and for some reason, I've not been on the chart throughout today. I think this one happened during the Asian section. So this drop happened during the Asian section. Then during the New York session also, guys, I saw a second entry, but I was not really happy with what happened. Yeah, because I was also comparing my chart with EU. Let me show you guys what I saw here. I was using this fair value gap as a point of interest during the New York session after that news released. But you can see what happened here. This whole impulsive move into the fair value gap, and price closed completely above the fair value gap. So I had to discard it because I'm looking for a fair value gap that price is going to close, like the body is not supposed to close inside the fair value gap here. So the body closed and even closed above it. So I had to discard the setup, which is actually playing out because this was like a good point of entry for me. Then I also had one on Euro USD also. Let me show you Euro USD. I want to make noise inside the video. So this is Euro USD, same this setup. I also discard. I also like forgo the setup. Then I was looking at this level here today and seeing it happening almost at the end of the day, around after 9. So this is when price is retracing to my POI, and I'm no longer interested in this trade here because I was waiting for price to come here during the New York session, but the news did not really trade inside this box. That was one of the things I didn't like about this trade because I was expecting the news to trade inside this box. Then I'll take a sell from here and see when it's playing out now, and the day is already over. I just needed a quick scalp, but since it did not play out, I'll just let it be till next week. So I also talked about gold trade. Yeah, one of the reasons I came back was for the gold setup. For the gold setup, I actually did hit TP. We actually hit TP from the good setup. It's even possible. Yeah, let me show you the good setup. We actually hit TP. So this is the good setup. I could not even come back to do the aftermath of the video. So we went to TP and you can see I had a good exit point. This exit point here, which was this liquidity, and you can see how price swiftly retraced downwards after the sweep of liquidity. You can see how price retraced downward after the sweep of liquidity. So having a good exit strategy is something that will help you in the market. I know most people must have been aiming for, let's check 2 hours. Most people must have been aiming for this overall liquidity here, but having a liquidity at maybe this one or this one, but this one is initial liquidity because, and you see, so there's a fair value gap here. I didn't even see this fair value gap, and I'm just seeing it now. So you see how price is tracing to the fair value gap using this one as an inducement. This is even perfect sell model. Like if you know what I'm talking about. You have your fair value gap. You have this to be your inducement, which was the liquidity for my exit. Then you see how price is going. Price is going to target the next liquidity, which is this low. So this was actually this low. This was actually a um perfect sell setup, and I did not really notice it. I just did the counter trading up. Let me show you USD card also. USD card also. I sold USD card and we got to take profit. I also bought here. So I was actually counter trading here. Then I had to sell in line with the trend. If you look at 2 hours, we have been bearish. So this is it here.